Welcome, everybody, to another episode of the System2 Podcast. Today, I have the pleasure of speaking with Alina, who started Fiskl AI. And the goal of Fiskl AI, as far as I understand, is to replace accountants using AI accountants. So tell me, what is wrong with accountants? Why do they need to be replaced with AI?
No. There is nothing wrong with accountants. First of all, thank you, Matei, for inviting me. Fiskl is meant to automate the admin work that both business owners and accountants absolutely hate. That's not adding any value to your business. And it's just draining your time away from focusing on what you do, for your customer, your clients. So we automate the parts that have to do with tracking expenses, issuing invoices, categorization, reconciliation, everything to get your accounts ready in time to see your cash flow in real time. And that's not about replacing the accountant. It's certainly not going to replace the business owner, but it's going to make life easier. And it's all about doing management by exception, because there is a philosophy camp of, doing autonomous accounting and getting agentic accounting to be able to capture and automate as much as possible.
And you don't fall in that camp. You think that you want to basically automate the boring parts of accounting and still leave our accountant friends with something to do.
So let me paint a picture for you, because there are accounting companies in the US who say we have autonomous ledgers. These companies serve startups. Startups have very predictable expenses in the States. They all use the same infrastructure. All the expenses, all the invoices are recurring. It's very, very similar what comes in the company in terms of expenses and outgoings, and you have a Stripe, connected payment system. It's very, very easy to automate that and claim 98%. As Fiskl function in 207 countries at the moment, and we connect different banks. Some banks don't even have APIs. When you try to reconcile cross-border payments, multiple countries, multiple currencies, it's a completely different animal. So anybody who tries to claim full autonomy in accounting, for cross-border, in AI, I would not believe it. My own tests with my team, you can get maybe to 98% if you can automate all the banking connections, maybe. And that if your expenses are very predictable, but otherwise it's a dream. The reality of business, it's messy, it's cross-border, it's paper, depending on your industry, the complexity is so high. Yeah, because they're not dealing with inventory management. They're not dealing with multi-country VAT filing. Yeah. So the complexity drives how much you can automate. And the reality is the automation is on a spectrum. It's nice to be in the US and do USD only accounting like digits or puzzle, and claim AI automates 98%. Yes, I can automate 100% in the US. Yeah. But in South Africa, in UAE, in Singapore, the complexity is much higher.
Interesting. And so when an AI company comes out and says, okay, I can automate this, your point is that to understand how niche they are, and yes, they can automate a lot of one very small thing, but if you ask them to do something else, then that involves another human in the loop, and the point of AI gets diminished pretty quickly, unless they've from the beginning been thinking about how to do this at scale.
Correct. And it's complex. The world is complex. It's not a narrow set really, because US is big, lots of startups, lots of companies. So there's a lot to capture, but it is still a subset. Yeah. The world is big. So once you move to multi-currency, once you try to automate, you have to have multi-currency embedded at ledger level. And the way AI parses multi-currency, it has to be embedded from day one. You can't have USD accounting and then say, I'm going to move our ledgers to multi-currency. It's not going to work well. Our CTO comes from building high-frequency trading engines for HSBC and RBS. And the architecture was well thought through. We were looking at blockchain, immutable ledgers, everything that was coming along that we needed to kind of aggregate into real world accounting, so fiat and non-fiat. So the complexity of looking across not just multi-currency, but potentially blockchain in a single world accounting gives you, what ledger structure you need to have to be able to cope with that.
Is your goal for Fiskl AI to replace QuickBooks I don't think anybody likes QuickBooks, but we're all using it, or is this
So
is
yeah,
better?
QuickBooks is just one of the big incumbent platforms in the market. In the world, we compete with incumbents who are Xero, QuickBooks, Zoho, and Sage, depending on which region of the world. There are new entrants in the market that are with some AI capability on a spectrum as well. There is Puzzle and Digits, pretty much US focused. And the SMB segment, which we serve, so small and medium enterprises, there are 500 million of them globally. Not everybody is on QuickBooks. QuickBooks is maybe embedded in 5 countries around the world. Yeah. Xero is coming out of Australia and embedded more in Europe. They couldn't make a dent in the US in QuickBooks. My goal is not to replace QuickBooks. My goal is to take a share of customers from QuickBooks and whoever else is using other systems like disparate systems and serve them well for multi-currency in particular. Yeah. So if you're trading cross-border, if you're trading with Canada, you're in the US and trading with Canada and Mexico, you need multi-currency. That's our strength. So we aim for that set of customers who need to be able to manage that complexity where you have, 2, 3 banks, multiple accounts, multiple currencies. You want to have your Stripe feed come in and you want it reconciled out of the get-go rather than have 9 steps like in Xero. So I'm happy to take a portion from QuickBooks, the ones that are unhappy with the multi-currency capability and the AI automation, but the world is big. I don't need to replace QuickBooks.
Well, somebody should, because it's painful to use, especially in the age of AI. And this is one of the things that for our business, it's painful. So just simple things like tagging transactions to things, and it's wide. That's what LLMs are phenomenal at. That should be a very easy thing to automate and make sure it's going in the right place, and it's not.
That's true, and that's we think of the age of AI in 2 ways, 3 ways actually. So when we built AI into Fiskl from the beginning, LLMs were not in the market. So we built a proprietary engine for categorization and reconciliation. Then we built data ingestion. When LLMs came through, we are able to dive into that data, and kind of gather insights and allow read and write to the ledger. So now when you come into Fiskl, we have an AI 24/7 CFO. It can give you insights in any language, which, you can connect the ledger today to Claude and do it. Yeah. No miracle there, but we give you checks and balances insights, where basically we verify any data that's coming into your AI CFO and it flags you have 24 unreconciled items. Therefore, this temporary, insight that I'm giving you is pending that reconciliation. So go correct those items or let me correct those items. And then these are going to be consolidated, audited items. So there's a difference between Claude doing it and a ledger running the checks and balances before Fi, our AI CFO, answers you correctly. So we do the audit before you answer, which is very important because we look across the entire system. You can't just connect your bank account and say, mark my expenses and draw me up a P&L. It doesn't work like that. And the more complexity you have in the business, the more the underlying ledger needs to have all pieces that are not sorted before giving you a view on your cash flow and what you should do for the next 6 months in terms of scenario planning and forecasting, because otherwise the numbers are ephemeral.
Yeah. Can you give me an example of one of the customers that you are working with and go deeper into one of these problems that they've been able to solve using Fiskl?
So we have a customer in the US running an installation business across thousands of sites with over 1,000 users, meaning they install 4 different properties, machines, and so on. So quite heavy. Their invoices are probably 200 line items per invoice and around thousands of invoices per month. And all of those need to come into accounting and be automatically reconciled. There are payments processing fees associated. There are different payment systems. Yeah, some of them come directly to the bank. Some of them come through Stripe. All of that reconciliation takes days for them. So if you're looking in that business, by the time you're at mid-month, before Fiskl, you don't have an insight into your cash flow. Nothing has been reconciled because in a system like QuickBooks or Xero, what comes into the banking ledger needs to be categorized and matched before being posted to accounting. Without posting to accounting, you don't know what your P&L stands to date to the second. In Fiskl, when the data comes in from the bank or from your payment systems, which we have integrated, it lands directly in the ledger. And by the time you open your Fiskl account to look at your P&L and your cash flow, everything has been matched and reconciled for whatever Fiskl can figure out how to match against your custom chart of accounts, which means, you're specific to your business, to your industry categories. We have done it for you. So you do management by exception. So your cash flow is almost real-time cash flow, provided that you've brought, the exceptions to date. And this is what accountants want as well. So we were speaking, we have a common acquaintance at BDO. Yeah, BDO serve a lot of, small and medium-sized businesses with high complexity. And the major piece that they want is for tax planning, for accounting, for being able to help businesses with more sophisticated advisory, is to have the accounting done much earlier, to have real time to be able to plan and infer tax implications. Without real time accounting, you're not able to plan at all. And that's a big difference.
Yeah. When you purposely went after a very complex market, if you're starting global and not focusing on any geography, walk me through that decision. Like, why did you choose to start with the hardest of problems?
So when we started Fiskl first, we did it on our own cash, and we get our co-founders and mine's cash, and we got a lot of feedback from customers. So one of the things they said is it's all fine to do local accounting, but the complexity that we struggle with is multi-currency. So we had quite a few customers, on the initial platform. We scrapped it and we said we have to architect for multi-currency from the ground up. We restarted the platform, we relaunched. Yeah, it was an effective 1,000 customer MVP, which is quite valuable. And then we architected with global in mind, because we noticed that people don't sit in one country. Cross-border happens across Europe. People do subsidiaries for various reasons, tax, they manage worldwide. And if you don't build for everybody's use case, you're kind of pigeonholing yourself in one country. And this is a question that was asked to me yesterday at the RAC IT event, at UiPath. Why did we go global from inception? Everybody told me, stay local, start in UK, then move to US and maybe go to another market. Actually, US was, you have QuickBooks there, don't go against QuickBooks. We did not listen. We launched globally, even though we didn't have the languages, but, more than 40 countries, have English. I think even probably in 70 countries, you can survive with English accounting. And actually, opportunistically, our biggest, first big customer was JP Morgan Chase. We integrated with their payment system, and that grew our base in the US to over 50% today.
Wow.
So going global has multiple benefits. Number one, you hedge against economic uncertainty. So if UK is going down and UK is a very small market. They have 7 million SMBs. That's the whole customer base of JP Morgan Chase. Yeah. So you're playing in a very small pool while you have the ocean out there. And if you can serve customers in UAE, if you can lead the way in a country where e-invoicing is coming along, if you can capture in the US, you don't care what the economic winds are. Yeah, if war breaks out or FDI inflows stop, you basically power up in the region in which you want to push harder.
You're also Romanian. I feel like many Romanian entrepreneurs with whom I speak do not go global. They want to start with the local markets, and then phase 2 is Europe more broadly, and phase 3 is maybe coming to the US. I think that's a mistake. It sounds like you also did not listen to that advice when you were given that advice. And granted, the UK is a much bigger market than Romania is, and still that wasn't big enough for you. I'm curious, what goes on in your mind, the mind of an entrepreneur who gets advice that she should stay local, but screw that advice. I want to actually go big.
So I listen to advice, but I process it through my own internal kind of feeling about the customer, because as you know, when you're starting a company, you talk to a lot of customers. So what I hear from the customers on the ground, I balance against what I hear from people who are well-intended, but they've never actually spoken and felt the pain of the customer. So I balance it. I question myself. I always run a check, am I making the right decision? When I looked at the UK market, it's bigger than Romania, but it's a fintech, basically bloodbath. If I'm competing in a small market with very, a huge number of fintechs, banks trying to get into accounting, fintechs trying to cover some automation portion of ARAP, accounts receivable, accounts payable. There's hardly any space, and then I have to throw a lot of money at it to compete. So I captured the ones who were disenfranchised from other markets, from UK, from US, from Europe. And I connected the global banking aggregators to be able to support. And it's very easy to go global, but it's even easier now. And I'll tell you why. It's easier to support global markets if you can now localize with AI a platform in 20 minutes. And it takes 10 minutes to deploy the language across the platform, the accountants hub, because we have the accountant side and the help site and the website and everything. And you have your own AI assistant, which helps you to navigate the platform in your own language. Not only that, but we've operationalized customer support, fully agentic, to be able to, with human in the loop at the end, to be able to serve all markets, any language. And
how did you roll that out? Were you launching one language, like one market at a time? Or
we built a language localization in the platform from ground up with the global view in mind. So every word, every label in the system has a placeholder for another language. So now we have the language file, we translate it, we verify it with a few accountants, and then we upload it and it's live.
And what does that look like? Do you have just one website that when people log in from all over the world, it just personalizes to that region?
Yeah, it's in your language. And you can switch languages, actually, because you might have an accountant in the US, but you might have a company with subsidiaries in different countries looking to work in their own language with a common chart of accounts. So the chart of accounts has to stay in the original company language, but you can switch based on your region and your language.
Tell me more about your go-to-market strategy. And I'm particularly impressed that you had 1,000 customers on your MVP.
Oh, that was early on.
I know. And then you just basically throw it away and pivot it to something else. Like, how do you even go from 0 to 1,000?
That was early days. That was a while ago. And we were testing the product. We were learning. When we launched the global multi-currency platform, we started learning even more because we didn't start as accounting. So accounting is only 3 years now on the market. But we built it up. We added banking connections and we learned from the customers. So the best thing that we could do is to basically listen to the customer feedback and build in that direction, because customers tell you every day where you need to go. And of course, we have our own view of the automation and what we need to do, but basically you start building and when we re-engineered accounting, we were talking to the customers and they said, we don't know how to manage debit and credit. We don't know how to reconcile. It's very painful. We do it on a Saturday. We do it on Sunday. And they said, can you share your accounting file with us? So we looked through a lot of accounting files. They were messy. Yeah. And I have an MBA in finance. I mean, if I have to put pen to paper to do debit and credit, that's really, really sad, right? Yeah. So it turns out that normal business owners, they don't go to get an MBA. They don't learn finance. They don't go to accounting courses. All they want to do is get paid, invoice their customers, and make sure everything is reconciled so they know they can pay their staff at the end of the month. And that's all they want. And they don't want to sit on a weekend doing finances. Neither do the accountants. Yeah. If they end up, 3 days before tax time, with everything, undone, it's a hassle. And, tax time is a nightmare. So we basically re-engineered accounting to make it easier for the business owner to navigate without knowing debit and credit. Now with AI, you have an advisor to the right of your screen. You power up Fi and you say, how do I do this? Yeah. Fi will tell you have 20 unreconciled items. It's so much easier in the age of AI to manage your finances. Yeah. With Fiskl, we just released MCP. You can plug in Claude. You can bring your own AI. We're releasing agentic agent-to-agent gateway to be able to have your agents talk to Fiskl, because the world is, all about agentic AI and interactions and payments. We can see the agents kind of communicating already from the payment side, because the payment providers have launched quite a few agents. So we're opening up that world to be able to connect your CRM the way you want to. We shouldn't have to do integrations in this day and age. You can connect your system, take the data out. Bringing the data in, we might question what the customer can do and should do, because accounting is subject to regulation, and what you submit and so on has to be auditable, immutable, and locked. So it's very important that that data is not changed willy-nilly by an agent, an external agent, by plugging in your Claude, and then your accountant freaks out at the end of the month. But the world has opened up so many possibilities.
Claude committed fraud. It wasn't me, so I can see that excuse happening. Yeah.
Yes.
I just told Claude to make my P&L better.
LLM made that change. I don't know what happened there. So auditability.
I see that excuse come up. It's like, I didn't know this was changed.
Auditability is very important. So when we speak to accountants, the step change for accountants is very gradual. They like AI inside the workflows of the accounting firm, AI that's auditable, and they want to trace what has happened. They don't want to approve every transaction. AI said this, categorized like this, click, click, click. They want management by exception, but they want full traceability, auditability, and who edited what. So if you're in an audited file, an accountant made this change, the business owner made this change, the AI made this change, and you have to have that logged. And you have to be able to filter and reference. And if you categorize a transaction manually, you have to switch it from AI mode and make sure that where you left off in the review, in the audit review, for example, it's marked correctly. So you have to make it, to work in both worlds. You can't just deploy AI and say, it magically, autonomously did everything for you without explanation. Because AI doesn't know everything. It doesn't have context. So if you get a banking ledger, you have income, expenses. What do you have? The date, the transaction, which might be capped at a certain number of, letters, numbers. And then you have in and out. What's the context around the transaction? There might be an invoice, there might be a payment, there might be a contract associated. Yeah, there might be an upfront payment, which is counted differently from a revenue recognition perspective. So that context matters. And our ledger tracks the context as well in a proprietary way, which allows us to track the context. Can't speak any more about it. It will give away what our internal ledger structure is. But that context is important for agents, because agents can do better if there is more information around the transaction, and the banking ledger is not enough. So if you plug your banking ledger into Claude, which you can do today, or Anthropic, I think for personal finances, you have to be more careful when you're doing it for your business, where you owe taxes, and there is certain implications for how you submit, and you can get huge penalties here from the IRS, for the wrong submission. So you don't want to chance it.
I'm curious about how you get clients. Do people just find you on your website? Are you more of a direct to consumer user kind of company, or is it B2B sales where you have to spend more time? Because you mentioned you get a lot of feedback from these customers, so it's not just like, they're using the platform. You're actually communicating with a lot of them. How's that work?
So we early on looked at multiple channels. We tried partnerships. We tried partnerships with companies that wanted to sell a variety of SaaS. We tried telco. We tried big banks. Yeah, we tried a variety of referral partnerships. I would say, from my spectrum of go-to-market in the channel, from big banks, incumbents like U.S. banks, Canadian banks, very few of them can sell accounting effectively. Yeah, they're trying to retain the customer, but there is no drive to sell. When we partnered with neobanks, it worked really, really well, because they move fast. They want to have value-added offer, and there is a common drive to, have that offering for the customer.
Interesting.
Then we partnered with payments providers. Payments providers are in huge competition in the market. By offering accounting that works for their customers and kind of syncs the data directly and automates the reconciliation, they have more retention. It's harder to extract the customer out of accounting. It creates stickiness. You're not going to rip out your accounting system every day. And then these are kind of our large partner enterprise partnerships. What I wouldn't do is, heavy incumbent banks again, because we tried and it takes months and years.
And the answer could still be no, or even if they say yes, we'll do it.
It takes time. You have to go through InfoSec. You have to become a supplier to that bank in some cases. With some partners, we actually have plugged into banking infrastructure directly, which comes with becoming a supplier to the bank. If you're sending data into banking infrastructure, you have to be InfoSec to death. When we are bank grade, we have multiple levels of redundancy. It's very difficult. Yeah, you don't want to spend your time on InfoSec when you can sell to accounting firms in 2 to 3 months and they are onboarding customers.
Yeah.
So our next big channel, when we powered up the accountant hub and the ability to manage from the accounting side, we started in the accounting channel. So we started about less than 20 months ago in the accounting channel heavily, and that's become our main engine now. And for the go-to-market underneath to reach, also direct users, because we do sell to direct users, but I would say 20% of our effort is selling directly to users. Yeah, like marketing, spend and effort. Underneath, we have go-to-market engineering with agents. So I have a CMO and I have go-to-market engineers on the team. I don't have, except for one social content media manager, it's all go-to-market engineers. So I have LinkedIn agents, which connect me to all the accounting partners in the world at firms in the background on a separate laptop, because otherwise, it eats up my Zoom.
Yeah.
And we have email outbound, which a lot of the SaaS companies are doing. And it's a very good motion, provided that you can capture the interest. But it's a busy, noisy space. We do direct to calendar webinars, which are an excellent channel for us.
What's direct to calendar?
So instead of sending an email, you send an invite directly to the calendar. And
I have received some of those, and that's is that effective?
It's really effective. We put it, accounting firm partners are generally super busy. We put a 15-minute teaser webinar. We put something of value to them, how to work AI in their firm. We don't hide the fact that there is a Fiskl demo and we have AI in the core and there is an offering associated with that. If they're interested, they come.
And you put that just in the description of the events?
Yeah, absolutely. It comes directly to the calendar. And we run a whole day of webinars every couple of weeks. We start with Singapore, Australia, and then we move on to Europe, Middle East, Africa, and then with US. And we started doing the Caribbean and we're going to do LATAM because we're going to release 30 languages.
Oh, wow.
So we run the webinars continuously. Last webinar, 89 accounting firms from the US, we've already converted. And this was a few weeks ago, 2.5 weeks ago. Same with Australia.
Wow.
And in Australia, they're requesting payroll. I don't have payroll yet, but it seems to be a big deal. So.
And when you reach out to people, you're reaching out to the CFOs of SMBs, or reaching out to accounting firms?
SMBs don't really have CFOs. Yeah, even at 50 employees, you might have a bookkeeper in house and an accounting firm helping you from the outside. Yeah, so if you think of the SMB space, very few have CFOs.
So do you go to the accounting firms we go BDO?
Yeah, we go to the accounting firms, different sizes.
And the accounting firms don't see this as competitive because it's the work that they don't want to do anyway.
Correct. Yeah. So they're looking, accounting firms have caught on the innovation in AI. And they're wanting to change the practice side because there's a whole practice management software on just managing inside the accounting firm, how you build a customer, onboard the customer, document management. Then there is the portfolio of software that you use for the clients as accounting. Yeah. And there is not one accounting software fits all. If you think of, a few of the medium-sized accounting firms, and this is a bit of a kind of boring space in which I deal with, but they deal multi-country, they have different branches, different industry companies. You can't just have one software fits all. You have a portfolio and you have to think very carefully what you bring in. Yeah, because it's training, onboarding of the accountants and the clients, so it's a hassle. But with AI and innovation and the changes, and if you let them trial for a month, and test for one client case, 2 clients and so on. And they see the automation. You give them ready-made accounts with, synthetic data or real-time data. You can connect whatever. They see the benefit. Yeah. I use Fiskl for Fiskl. So I'm my own CFO. and I test. Now I do a timer. It used to drive me nuts when I was doing Revolut reconciliation across multiple currencies. So now I run a timer to see how quickly I can close. Yeah. And it's complicated. Yeah. And I always find something else that, I'm like in the Slack channel to the dev team. What is going on here?
Yeah.
You can't just it has to be smooth. It has to be really quick and visual. Yeah. And then I want AI to tell me. I want AI to come in Slack, connect, my own agent and to tell me what do I need to approve. I don't even want to go into the accounting software some days because, by opening another application. So I think this is where the world is going. You're going to interact with your accounting ledger via whatever messaging app you want to. It will report to you in the morning on your cash flow, right? And it's not a walled garden. Accounting can't be a walled garden, the way, think of Apple and all the, walled garden systems. You have to be able to bring your own AI. We have to provide the guardrails and the immutability and log transactions and so on that accountants need to rely on because they have a fiduciary responsibility for this. Yeah. And CPA, certifications and so on are highly dependent. So you can't mess around with data. There's a lot of responsibility and accountability, even though it's not, something that, so whose accountability is between the business owner, the accountant, there is interpretation, but at the end of the day, the data underneath has to be reliable. So we put guardrails in, but you should be able to, in the next, 6 months, 12 months, you should just be able to communicate verbally with your AI. Yeah. It will tell you where it is. It will tell you what's an exception, manage between you and your accountant agentically. I mean, that is the holy grail. It's a really good time to be in accounting and AI. Accounting was never sexy. Yeah. No. When I was speaking to investors and VCs about accounting, they're like, oh, it's a busy category. Oh no, it's like, how do you make it? How do you sell to SMBs? It's a sexy category now. Everybody's on the office of the CFO and But I think I look at the evolution of AI and, generative models only get so good with deterministic data. Yeah. Where you need to have cause, effect, and you need to understand the relationship. People are building real world models. I'm really curious to see what's going to come up. Tabular AI. I don't know if you've heard of Tabular AI. So NetSuite bought a Tabular AI company. It's basically an AI that can deal with rows and tables. Okay. Yeah. Tabular. Yeah. Yeah. So we're watching with interest what's happening in the market. But I think we should, the ledger should be the structure. And you should be able to manipulate your data as a business owner. And if you're a bit more technically inclined or you use AI and you want to connect an agent, you should just call the MCP and it will tell you how to connect. Because today you don't need to know how to do an API integration. Yeah. Even if you're like, you don't know any Python, you should be able to say to Claude, can you connect this data to this data and give it to me in whatever format I want? So our whole belief is that open up, let the ledger do its work. Yeah. And you use it how you want. And you open up agentically to anything. And you can serve a range of industries, from e-commerce to, pharmacy, supply chain. And you just connect your data. It's a magical time.
Yeah. Yeah. No, I mean, there's, and connecting to data has gotten easier. There's also a lot more data out there, different things to connect. And, I found that I was really, I like your point around how your go-to-market strategy is going back to the first question around can we replace our accountants, and your go-to-market strategy is partly working with accounting firms as a channel, and they're happy to introduce you to their clients. Now, I wonder how much of that is because from a revenue perspective, accountants charge fixed fees mostly. I mean, they also charge by the hour, but I imagine it's a smaller percentage of their business. And so law firms, for example, are less likely to adopt this because that means less billable hours for them if they're not doing the tedious work. They love tedious work because it's more revenue.
It's billable.
Yeah. Whereas for accountants, I think the pricing model is a little bit different so that they are actually incentivized to do the right thing by their clients and incorporate more AI.
So we haven't seen any rejection of AI because accountants bill in packages generally, unless you're, have a huge variability month to month. So you might be charged, let's say, $250 a month for your accounting. Yeah. All in one, software and service included. But
we pay more than that. So we should
yeah,
talk to
I'm talking, like
friends.
a starting package, for a small SMB, because, the world, of SMBs is big. Yeah. The range, the spectrum is big. But that's not where the value is. So when I speak to accounting firms, they say, okay, great, we can automate all of that. Yeah. And, we can, keep the same package, lower the price maybe if, customers challenge it. But where they're really interested is if we save all this time on processing the client data with AI, what else can AI do for me? So when I spoke to Waradi Davis in Chicago, mid-sized firm, and I said, okay, what else can the AI do for us? And I said, well, it can provide a ready-made CFO report. You manage by exception the client data, then on your accountant hub, which is called Atlas, power up Phi, and it will produce a CFO report, which AI lift 80%, and then you review as an expert. You know the tax consequences for the client, you know the business implications. Accounting can't see everything. So accounting is just numbers. But the accounting system can't see the context surrounding the business. Yeah. You might have multiple businesses. One fiscal entity doesn't know what the other entity is doing, right? So the accountant's value is looking at the whole picture and giving that 20% expertise. Yeah. While AI has already pre-drafted everything. And then they can, send a CFO report and charge extra. So not only do we save time and costs, we empower accountants to, do different packaging, the advisory packages that they've been dreaming about for ages.
Yeah. That's a great point. Yeah. It's just take the money they'd be spending on the accountants anyway. Now you're getting much higher value work where they're thinking strategically about what to do and not just putting out fires and dealing with the minutia of running this.
Yeah. And AI can pre-fill reports, like in Singapore. We work with CSC accountants, multi-country, Australia, UK, and Singapore. And they say, we can't submit, just putting the director's financial statements, which is basically a PDF with all the regulatory, what is submitted, what has been audited, the P&L balance sheet. Xero can't do it today. Yeah. It's just pulling up a pre-made report based on existing data in the accounting system. They have to go in and copy numbers manually. I mean, this is the world of accounting firms. Yeah. It's so separated, the data, and so manual still. It's unbelievable. And we did a proof of concept in 2 hours for the partner at the firm, just pulling data, with AI automatically. And this is like a 37 page, depending on the size of the business. It's not difficult, but
Speaking of data, you guys see a lot of it through your customers, and that data is valuable. I know you're already monetizing or thinking about monetizing that data. I'm curious, just even for our clients, investors that are looking to get a read on what's happening in the economy. You guys are sitting on some really interesting data around suppliers, how much SMBs are how much revenue they're bringing in, but also what they're spending that money on, which other companies are benefiting from this growth. First, I'm curious, what is the scale of the data that you guys currently have? And this think of number of customers, but also I'm curious, I don't know if you look at the amount of dollar amount that is going through your system, what percent of the economy do you see?
I know the numbers of transactions. I don't know the dollar amount. Our P&L is real time, so I'd have to run a P&L across the entire platform because it literally calculates it in real time.
The P&L of all your customers.
So if I want to calculate the revenue across all of the customers,
wow,
we have to run a script to run. It's real time accounting.
Yeah.
So the P&L you spin up. Yeah. I mean, I can look, for whatever has been logged, but every time it's recalculated in real time. Yeah.
That's actually.
So I asked my CTO, can you actually see how much dollar value is going? And he's like, the script is because we have to literally spin up every P&L and calculate it in real time. You understand data, that's how yeah. So, but I know that our system that over time that we built up in terms of we've trained on over 500 million transactions.
Okay.
As a data set, and where this data set is valuable, and some of our bank partners in different countries where we have connected directly, they want lending, for example, as a use case. This is a really valuable one for banks in particular and payment providers who are looking just at a subset of the data that's relevant for lending. But lending is, not just lending approval prior to, and you want to have 360 data, not just, payments without seeing the income and the cash flow and everything, but also post lending, because risk monitoring is a big deal for banks and lenders. Yeah. So when you connect in Fiskl and you can monitor the data monthly, daily with a feed, that data, and of course with customer permission, because banks, you're the bank's customer, you give them access to Fiskl, they can monitor your data for the loan in real time. So actually it cuts the risk on the banking side significantly. And if the bank and the customer agree, they can do proactive lending. So if you give your bank access to your data for the express purposes of, potential lending scenario, they can do proactive lending and make you offers in real time in your banking experience. So there is a huge benefit by just connecting, and your bank sees, and hopefully you get more lending, because SMBs are disenfranchised today from getting loans. I mean, you have to have a $3 million business to be able to even apply for an SBA loan.
No, this is fascinating, because the other thing, and it would be great if you guys, from a legal perspective, make sure you have rights to all the data that you're collecting.
You have to, because first of all, it's the customer's data.
Yeah.
So what you use, how you use is legally enshrined, and we deal in Europe, and Europe is heavily AI regulated, as you know, much more than the US. Yeah. Different privacy rights. So we have localized servers here, different data agreements here. So you have to be, and regulation on AI is getting more stringent. So what you can do with the data, and how you parse the data, and what's anonymized and what's used, and which data is ring fenced, because accounting firms might not want their data used. So you have specialized agreements. So you have to segment the data as well, and what you can use for training and what you can't use.
Yeah. But no, this is awesome. Imagine if you had that real time. I mean, it doesn't have to be real time. It can be daily. You can run that process every night, and you can see what is the P&L of the entire economy last night. Right?
Well,
that would be I know you guys aren't there yet, but as you
we're
grow,
not at that
people...
scale. We're sub 100,000 customers at the moment, so it's not enough to get a global view. But I can definitely.
But still, right?
Activity.
You don't need to have, and we work with data sets that see 1-2% of the transactions of
you
companies.
Get a signal,
and it's fine. But as this continues to grow, it's not crazy to think that in the near future we will have systems like this that can give us the job of a macroeconomist is going to be in some ways easier when you can have daily data on what's happening in the entire economy.
Yeah,
it's insane. And then also to your point about also getting credit risk on things. And the other thing that you mentioned that's interesting is obviously this is relevant to the banks that want to loan to
any
them.
lender, a payment provider doing lending, anyone.
It's also interesting to investors who are investing in banks. So now if I want to pull up the JP Morgan portfolio through the Fiskl data and see all the loans that JP Morgan has made to your customers, which ones are higher risk of defaults, so I can get a read on okay, what do I think of JP Morgan's? This is a bad example because they're great, but picking a smaller bank, when you can potentially be I think their loan portfolio is at higher risk relative to others because they've made loans to companies that they shouldn't have. So this visibility into the credit worthiness of businesses, into what's happening at the economy, the suppliers that are doing business with your customers. It's a lot of really cool data use cases.
And for the government, because I think for example, the American government, as much as SBA has quite a few efforts, having access to that data, and of course, there is a bit
they would
of
love to tax us
political.
More,
I know, it's from the tax side, but the bigger part is, actually making loans to the businesses, because cash flow is the biggest detractor for growth for small businesses all over the world, not just US. So if you have that machine that automates and gets insights, and you can see that the banks are not lending, and you can apply pressure as the government as well. So there are benefits aside from, just the IRS tapping your bank account. Yeah, that's one side of the equation. But imagine if you could benefit from the other side. And of course, there is all the legal permissioning of data and, customer acceptance, and you decide when you give access, but there is a benefit and you have to do the trade-off.
Yeah. And it's, like getting access to all these, whether it's lending or just getting visibility into what's happening. I also think a cool use case from a political standpoint, every politician loves to talk about small businesses and how their policies are great for small business. So you can actually test this stuff now. You can, if you had the daily, like any decision, like what happens with tariffs?
Yeah.
You implement tariffs, like what actually happens to the P&L of small businesses after that gets put in place? And everything else. I mean, this is the beauty of having access to more data, not just for those businesses themselves to see how they're doing, but in aggregate across the sectors of the broader economy, you can see the impact.
Exactly. And there is a bi-directional flow, yeah? So, for example, the IRS can benefit, by making tax digital. The digital tax submission has been up, down, Doge and so on. It went away, it came back. But I think it's back in the going through, into the budgeting round in the Senate committee. And, tax, submitting tax is big business for the likes of H&R Block, and TurboTax and so on. But if you're a small business, you shouldn't have to pay through the roof to file your taxes. They should just come from your P&L, the accountant approves, and they should go to the IRS. IRS has predictive, insights on the incoming tax. Yeah, so that's a benefit. But in return, that should be something back for the businesses in terms of benefits. And so it has to go two ways.
Yeah.
And hopefully, and I see this around the world, HMRC in UK bringing agents to be able to automate quite a bit. And hopefully the IRS will go into the agentic era as well. So that should be an interesting one to watch.
Yeah. I mean, that's and a lot of people talk about how if the IRS wanted to make more money, all they would have to do is just increase compliance with the existing tax regulations. Like you don't need to raise taxes, you just need to increase compliance. And the argument has always been like, we don't have enough people to go in and do all this. But if the IRS does adopt AI, then there could be a scenario where they can now audit every tax return. And that could be interesting.
That's true. Yeah. I mean,
hopefully they're not thinking about this. We'll censor this part.
I would not know. I would not know. I know I watched some senators who are lobbying in the Senate for tax digitalization with all the implications. But where I heard it's much more interesting is at state level, because that's where the budgets are under pressure, and they want to work with small businesses for the local taxes and actually deploy loans. So bi-directionally, and Louisiana is under pressure budget-wise, so they're looking at how to make life easier, but also enable the businesses. But at the same time, track the sales tax in real time, budget forecasting for the state.
Yeah. Interesting. All right. To switch gears a little bit, tell me more about the stage in your company's journey. You mentioned that you have over 100,000 customers. Under. Okay.
Just under.
This is marketing. We can call it over, under, about.
It's a big difference. It's a milestone.
Yeah. How you guys are currently fundraising? What is how's the company doing?
So we've raised £5 million, so about $7.4 million lifetime for the company privately. We're not VC funded. It's a direction we chose specifically, and we push for revenue early. We are headquartered in UK, bringing an entity here, and we have entities in 2 other countries. When we pushed into different markets, we had to aim for profitability. Europe is a little bit more risk averse in terms of investment, so you have to have proof of, customer adoption, profitability much earlier than American companies. So we had to aim for that really early. We're at break even, but I'm funding expansion. We're scaling now. So by scaling, I mean we're already in 207 countries with a long tail. US is our biggest market, followed by Europe, UAE, South Africa, for example, and then Southeast Asia with Hong Kong, Singapore, Australia. But now I want to really go global. And I want to go deep in certain countries like Latin America, Brazil, because Brazil is number 4 or 5, depending on the day, in FDI inflows, and it's a huge market. I want to go deeper in the US and go through the accounting channel, because now they see the innovation in AI and there is a time to move, and the time is now. And we're going to Germany with a large partnership and localizing to the medieval chart of accounts and the German accounting. It's a completely different.
Is it really? Well, how is it different? It's
Every business size, so there are about 3 buckets of business sizes, has a mandated chart of accounts from the government or lines fully numbered that have to flow correctly into their data, which is their equivalent of the tax. And then it's like East India Dutch company, basically, about 500 years ago.
wow.
So we have.
How often they have to do this? Like once a year or more frequently?
No. So, you have to do the mandated the chart of accounts from the government, and the numbers must match and so on. It's very old world accounting.
Why did you choose to do private fundraising from the beginning?
So when we look at the market, we build accounting. We're competing against incumbents who have 20 years of build up an ecosystem. When you start a brand new accounting platform as a challenger, not only do you have have to have all the features inside the platform, you have to have some of the key connections. Yeah, like your team, for example, needs Avalara. I don't have an Avalara connection. Yeah, so I know that from your team. So we can't have everything. And to deploy a product in the market with VC money, yeah. So if I took in 10 million. I'd have to know which levers to press, and I have to activate and how to activate the accounting firms and make that revenue show up really quickly. Yeah, I was still building, yeah, and by the time I got to platform readiness, ready for scaling, which we're now in like swinging, I didn't need VC money, and I can raise privately. The other angle that we always consider is where is the money going? So when I have VC conversations, we have the debate as to how much is R&D and how much should go into sales. And it's 80-20 from the VC side, sales to marketing to R&D. The R&D is critical to what we do. Yeah? So we overinvest in R&D, and it's always a balancing act. And then I haven't found maybe 1 or 2 people on the VC sides, without naming names, who are able to understand the customer. So when I speak to most of the funds, the people that I speak to, they say, you need to use the Brex model, you need to use the RAMP model. And I'm like, a RAMP is treasury plus automation of AR/AP. Yeah, it's not the same model. Yeah, you're applying something that you've seen as
And what model are they talking about? The go-to-market model? Or
No. Becoming, actually,
to
doing treasury and so on. So I'm like,
okay.
Okay, but if I have to do treasury, I have to be regulated. Accounting is not regulated. There are 2 accounting standards in the world. I want to expand globally. So when I test, because I talk to the customers and I talk to accounting firms, and now I have in my DNA the feel for how these 2, segments are moving. And when I speak to non-operators, it's clear to me that they don't understand the market. Yeah. If you don't talk to the customer day to day, you have no clue. You're just telling me that RAMP did well. Yeah.
Yeah. Is the reason why RAMP and treasury is regulated in accounting is because the treasury function actually touches money, they're moving money?
Yeah, they're more effectively like a e-money entity, or what you call a non-regulated, what is the intermediary state in between a bank, before you become a bank.
Yeah,
and you can issue cards, right? Well, I don't know what the term is in the States, but it's like an e-money entity or non-banking entity, right?
Whereas accounting is essentially just reporting, like you're not actually moving any money.
Accounting has 2 standards. You don't touch money. You can scale globally. Nobody can throttle me in any country. Yeah, so that makes for much more rapid scaling. Yeah, I love what RAMP are doing. Yeah, they've done really well. They captured the segment of the market. I watch their marketing very carefully. Yeah, and I've actually taken demo calls to see how they demo and so on, because they do really well. But it's not our model, and our market is big. I can serve in Singapore. I can serve emerging markets. Yeah. And we have a philosophy that we don't need to rake it in and put the highest prices up. Yeah, I hedge worldwide, so our pricing is localized to the local market buying power. So in South Africa, you may be paying $5 for a solo, yeah, while in the US, the price is very different, and that creates higher adoption. And I manage the cost side really well. So that doesn't mean that I don't want to scale, yeah, but we take money in thoughtfully, and that I know where to press the buttons to accelerate.
How do you, speaking of scale, where do you think you can, like, what's your goal? Where do you think this can go? And particularly you mentioned that you're going after companies, SMBs that have an international component because that's harder.
That use multi-currency, yeah, cross-border.
And
because that's our wedge, really. When I kind of segmented the market, that's our strength. Yeah, real-time accounting, AI innovation, everything. And who can we serve best is cross-border. Of course, we serve local. I have, rheumatologists and medical consultants in California, prosecutors in Atlanta, you name it, it's in the platform because our platform is invoicing, expenses, time tracking, mileage tracking, everything you need in a business, products, services, everything is there.
So do you think that after you've captured a decent amount of the cross-border SMBs that you can then get more of the local ones because it's easier?
We're targeting both. We just lead with, we are strong in multi-currency, but the reality is we capture both.
Both, interesting. Yeah. No, this is really cool on obviously like what you're doing on the accounting side, but given my personal biases, I really like the data angle here, especially as the business grows. There's a ton of stuff that's a ton of interesting data that can come out of this, and another thing just that is difficult when we're looking at data sets is the revenue that like a business is paying to somebody else. So let's say you've got a new contract coming in. Yeah. We're ultimately, as investors looking at using this data to analyze companies, it's not enough to track that cash or just even when that invoice got sent out, because we're ultimately trying to match this to company reported numbers. Yeah. So revenue recognition is huge. And so if you don't take that into account, then like, I don't know, I can see a business
and a bunch of invoices. Is bastardized.
Yeah, exactly. Is it like a 5-year contract or is it a 6-month contract? I don't know. I just saw $1 million coming in, and that's going to have massive like implications on my back test to see how correlated like your data would be to the reported sales of the company. So for example, if we're trying to look at how adoption of Anthropic and Claude is going into these like small businesses, you can see, okay, they're spending more money on Anthropic this month. Okay, like are these like still the monthly contracts? Have they signed longer term contracts? But the point is that you guys would be in a great position to actually figure that out because you are doing the accounting. So it's not just like seeing an invoice going out, but you can actually see the duration and how that ultimately flows into, is this P&L recognized this quarter?
Yeah, recognition, everything. And again, it's the 360 financial data, which is valuable, because you can see lagging payments, you can see everything. Yeah, it's all there.
Yeah.
Yeah, you can see the product, services, evolution of the products and services, pricing, everything is there. Yeah, so I can skin the data in many ways, and you're a data lover, I can tell. So we love to skin the data and look underneath. What's also interesting is what's sitting out and affecting the financial data, and I think that's the next thing I want to capture. To have, if you want revenue recognition, you have to know the terms of the contract. Yeah, so I want to add the contractual terms. So, if you're sitting in your, let's say you're on your Mac and your, company folder is there. Yeah, connect Claude, parse the data, bring relevant data into accounting, and then the revenue recognition is correct. Yeah, because it goes against parsing the contract. Yeah, and bringing that data into the accounting.
Interesting.
And that's the really cool part. That's the context, next context layer that sits, all around the accounting system, the financial data. Because financial data is still a limited subset.
I love that. I think, just reflecting on this conversation, a couple of things stood out to me. One was how you guys are using partners to go to market and finding the right kind of partners with the right incentives to actually do this, and the wrong partners, knowing that some people are not actually, they might seem great, but it's actually going to be huge waste of time, which may or may not ultimately result. They may not even be incentivized, like once it does go through, to ultimately sell your product because they're busy with all the other offerings that they have versus someone else that is incentivized, where you're adding a ton of value to that partnership. The other thing that stood out is around how easy it is to go global as a company now. Like your company included is leveraging AI to go into these markets that otherwise would have been very hard to understand or go after, which is in some ways positive counter argument to the anti-globalization movement that we're seeing from on the political side. But from the business side, it's never been easier to go global.
If you can have a horizontal platform which doesn't need, FCA, financial regulatory environment in each country, I think it differs per business. You have to look at your own platform, but you can go global from day one, and you can hedge heavily. I would recommend it if you think, you can go global with the platform, and it can work for every market.
Yeah, and I think it's like the hedging diversification, but it's also just like go big, where many people start too small.
That's the ambition, right?
Yeah.
That's the ambition.
I also love your go-to-market strategy with the calendar, webinars, and everything. I feel like that.
And that's only one subset. It's agentic. We parse data in Claude. We used to use Clay for data parsing. All gone. It's all done in Claude with agents and Python scripts. And my go-to-market engineers have no development experience, zero. They run Python scripts and N8N workflows and.
I would love to talk to them after this. That could be a separate side business for you guys if you just like teach other companies that do B2B how to go to market using some of these tools. That is very interesting. Okay, lastly, if people are interested in learning more about Fiskl, what's the best way that they can get in touch?
So they can go to fiskl.com, number one. They can contact us.
How do you spell Fiskl?
Fiskl, and pronounce Fiskl. And Fi is our agent, and it's written Fi. Nice. People pronounce it Fi, depending on where you are in the world and your original language.
The problem of being global, yeah. Well, Alina, thank you so much for coming here today. This was a pleasure.
My pleasure. Thank you so much for having me.
Yeah, thanks for coming on.